What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL. But the charting method and the trading method that we use, you can implement it with any company that's traded publicly in the U.S. stock market. So make sure you hit that like button if you enjoy this video. It really helps the channel grow. Thanks to those who continue to tune in. We really enjoy your company. And if you haven't already, make sure you hit that subscribe and notification buttons. That way you are alerted when we release new videos. We do release bonus content from time to time. But the nightly and weekend videos, like tonight's video, focus on identifying triggers and targets for trades ranging from intraday scalps or day trades and all the way up to swings and long-term leaps. So if you want a deeper dive into exactly how we set up our charts, the trading levels, the colors we use for the different time frames, broadening formations, things of that nature, make sure you check out the bonus content on our YouTube page. There's also some free information in the description of this video, more about the strat, just a quick PDF that will help you really get the bases down real quickly. So make sure you check that out. I do encourage you to check the whole video, not just look for the triggers and targets, because we do talk about price action overall on all time frames. So with that, let's go ahead and get into the video. This video will be a little bit quicker today than normal. I've got some things I need to go and do, and today was basically a boring day, just waiting for the Fed rate announcement tomorrow. So again, it'll be a little bit quicker video than normal, but we'll still jam in as much information as possible. So for tonight's agenda, we'll go ahead and recap the price action from Tuesday, December 9th. Then we'll zoom out like we always do, look at the week, month, quarter, and year, make sure we're not too locked in on those small time frames and losing sight of the bigger picture. Then we will go ahead and zoom back in and set our 4-hour markers and the triggers and targets for Wednesday, that's not December 9th, it is December 10th. Let's get that right. So we'll go over the triggers and targets for Wednesday, December 10th, along with a quick review of the triggers and targets for the week, month, quarter, and year. All right, so let's go ahead and take a look at the charts and the intraday price action. Again, a pretty boring day, right? The Fed rate decision is tomorrow, so we talked about it in Monday's and even Sunday's videos. Don't expect too much to be happening as people are either getting into cash, waiting for what the rate decision will be to make their move, or just holding steady with what they have in their portfolios. So we saw evidence of that here today. If you're new to the channel, there is a simple strategy we use. It's a proven strategy. It's repeatable every day, especially at the beginning of the day. If you want to try and get a quick scalp in, or maybe get an early entry into the direction that price will move overall for the day. We look for higher lows at or above the opening print or the first traded price of the day. We look for higher lows at or above that first traded price of the day to get into calls, and we look for lower highs at or below the opening print or the first traded price of the day to get into puts. All right, so we see here we have our 4-hour levels on the chart. We have the overnight high up here at the top of the chart, along with the previous high a day. Then we've got the overnight low and the previous low a day closer to the bottom of the chart. So pretty wide range for the overnight price action. Honorable mention level here, or a couple of them here. The week flip, this 47.56, this was the first traded price of the week. So as long as price is above that level, the week is green. If price is below that level, then the week is red. And lastly, the 50% level of 2025, that's this white dashed line down here, 46.79. We'll look at this from the zoomed out picture, but we continue to talk about this about 3-4 weeks now. Maybe even longer, but 46.79 or last year's 50% level has been a major level of resistance for us. So as you can see today, we're still fighting it. Got a little bounce off of it, but didn't really get too far from it. So we can see, from a scalping perspective, we had the open and the push down, but then pushed back up to turn the day back green. We pushed back down and we got a higher low. Now it is slightly below opening print, but this is where nuance will come in for those of you who are more used to trading or use this method on a day-to-day basis and kind of know it like the back of your hand. Although it is below opening print, we're at two major levels, right? Previous low a day and last year's 50% level. So when we got that higher low off of there, knowing that today's price action would be probably pretty, not the biggest range, in anticipation of tomorrow's rate decision, we went ahead and just took the scalp, took the calls. You see, we pushed up, didn't get a higher high, but when we pushed back down, we did get a higher low. So that kept us in the trade. That pushed us back up to last week's high. Got a rejection basically to the cent off of there. It doesn't matter that it was to the cent, but we got a rejection off of last week's high, which we got a rejection off of yesterday as well. Pushed down, made a higher low, but at this point started making lower highs, accompanied by higher lows, which just signals consolidation. And so at that point, the second time we tested the last week's high, we went ahead and exited the position. Didn't want to sit here looking at the chart, tick by tick, waiting for something to happen, or set some type of stop that maybe wouldn't get us as much profit as we would like. So we went ahead and took profit there and watched the rest of the day. So I don't know if anybody else maybe got scalped this short movement to the downside and the bounce off of the weak flip, but there may have been one or two more scalping opportunities in there, but not really much else to be had. So kind of a boring day. If we zoom out and look at the 1 hour, let's get a cleaner chart here. If we look at the 1 hour, right, no real trend, just moving sideways since, Friday. Late Friday or early Friday even. We've had this range, a 3-day range essentially, just moving sideways. Yeah, there's been a slow creep upwards, but nothing to really speak of. So don't need to worry about the trend there. From the 4-hour perspective, we have had some solid higher lows as opposed to these soft higher lows that we were getting initially in this push up. So this is confirming the uptrend, right? Higher low, higher high, higher low, higher high. So we are continuing to go up, although the pace has slowed. And today we did get a little bit of sideways action, but it's just, like I said, consolidation or even indecision, right? Let me make this bigger for those on a phone. You can see here we have the solid higher low, higher high, solid higher low, higher high. Right now we've got this soft higher low here that we made, but it's just indecision, right? A 3 is just indecision on a wider range, right? The Bears had their chance, the Bulls had their chance, and then followed by an inside candle or a 1. That's just tight indecision, right? The Bears tried, the Bulls tried, and it went nowhere. Now, the one thing you can say about this candle structure, especially the 2 4-hour candles from today or Tuesday, December 9th, is it does lean more bullish, right? Although this was a 3 and it's just indecision on a larger scale, or even considered broadening the formation, it is green and it's a decently solid body to the candle there, a smaller wick on the top than there is on the bottom. With the inside candle, yeah, it's an inside candle, and yes, it did finish red, but it's a doji, so it could have finished green with a couple more minutes on the chart. Who knows? But the other thing to take into consideration is it's in that top half of the 3 from the first 4-hour candle. So I would say it's definitely leaning more bullish than bearish, but it's just consolidation at this point. Let's take a look at the day, because we did get a 2 down on the day. So this is a possibility. And we got a failed 2 down at that, right? So it's a 2 down because today's low or Tuesday's low is lower than Monday's low. But it's failed because it's not a red candle. It's not an inverted hammer or anything like that. It pushed down to go below the previous day's low, but it pushed back up to the point where it's green. It's got a decent sized body on it, and the wick on top is smaller than the wick on bottom. So looking to be a failed 2 down at this particular time. Again, we're going to have to wait till tomorrow. We're not in the business of predictions, but if we get that price action that goes above Tuesday's high, then this will be locked in as a higher low on the day time frame, which we really needed, because if we look to the bounce, we had one soft higher low, but nothing else from there, just straight 2 ups from there, just higher highs on a candle to candle structure, no lower lows. So this is our first 2 down, possible solid higher low. So we'll have to see where price action takes us tomorrow. Now, if we do go to the downside, which is perfectly reasonable, because number 1, the rate decision, but 2, we've got this gap here. And if we go below Tuesday's low, that does trigger this 2 up combo 2 down which has a magnitude of the top of this gap. So if we get into that gap, that then triggers a 1 combo 2 up, combo 2 down, and those are some pretty powerful reversals. We're in one on the quarter as it is. It's just reverse. We had the 1 combo 2 down, combo 2 up. So the magnitude of that move is not the low of the 1, but actually the low of the candle to the left of the 1, if you're not familiar with the strat. So that gives you some pretty good magnitude, some pretty good money to make to the downside if we do break to the downside. And at that, even if we do break to the downside, say we do run the strat, we reach magnitude, and then we reverse back around, maybe we catch this fib extension here from the April 7th low. If we catch that and start to push back up, that just locks in a higher low, on a solid higher low on the day, right? We no longer have this soft higher low to rely on. We have a solid higher low up here, and then if we continue to push up, then obviously that uptrend continues, right? It actually gives us a little bit of strength. It gives us better entry points for calls into January, February, March. Just gives you better position. Personally, I don't want to say I want to pull back, because of course everybody wants the market to just go up at all times, but I do have some cash set aside for when the market pulls back. We do here as a business in Bullish Chips as well. So, we're waiting for it. But at the same time, we want to stay involved because we are in this uptrend. All right. That's enough from the day perspective. Let's go ahead and zoom out here, looking at the week, right? Same thing over and over, kind of a broken record right now. We did go 2 up on the week, on Monday. So that is a good start, right? We've locked in this higher low on the week, and we're just continuing to push up, right? Running into this resistance of last year's 50% level. Let me just break back down to the 1-day chart so you can see the resistance a little bit better. But you can see that 46.79, or the 50% level of 2024, was resistance. It had to get a gap up to get up over it, but then obviously was sucked right back down to it. Got a little bit more of a bounce, but then pulled back below, and then resistance. You could say it was resistance here as well. It was resistance here. That's when we got this red inside candle last week. So again, we're fighting over this level. We're also running up into this weekly broadening formation, and the further we go along as we climb up, we're going to run into last month's high. So that's going to act as another level of resistance, at least intraday as well. We're talking about intraday trading. So just continue to watch how we react to this level. Obviously we want to continue to push above. Again, like I said, from the week perspective, here's this bull flag that we talked about. Let's make it a little bit easier to see there. Here's the flag. Here's the flag pull. Here's the flag, and we've got our bounce from there, right? Even reaching this 138.2 fib essentially. So just continuing to look for that movement upwards, right? We want to make that higher high, because although we did make this higher low, if we make a lower high and start to turn down, now we run the risk of at best moving sideways, at worst pushing down to make a lower low and starting a downtrend on the week. So again, not in the prediction game, not saying that that's going to happen, but it's something that we need to watch out for, because as responsible traders, we need to know what can happen on both sides of the coin, right? Let's go to the month real quick. Get an even cleaner chart. There we go. So obviously looking at trying to go 2 up on the month, locking in last month as a higher low, and just continuing that uptrend. Now, even if we do go 2 up, triggering the 2 down, 2 up reversal, that there's not a lot of magnitude here. The magnitude of that move is just the high of the candle in October. So we will want to see that breach to continue to push up, right? If we do get that 2 down, 2 up on the month, and we reach magnitude, then we need to go and turn and look at the quarter, and we can see, this is what I was talking about previously. We have a 1 combo 2 down, combo 2 up reversal, and again, that's very powerful, because it's not the high of the 1 that is the magnitude, it's the high of the candle to the left of the 1, which gives us this magnitude of 70.08, right? Now, we talked about at the beginning of the quarter when we triggered that strat reversal, that it's not gonna happen in 1 quarter, right? It's gonna take 2 quarters, 3 quarters, who knows, maybe even 4 if we get that sideways action that we were talking about. But for right now, as long as we're above this 36.15 level, we're still in good shape from the standpoint of the 1 combo 2 down, combo 2 up, and we're just looking to reach that 70.08 magnitude. All right, now as we're almost to the end of the year, that's where this year chart comes even more into play, because At the beginning of the year, we did trigger this 1, 2 up, 2 down. So again, that the magnitude of that move is the low of the candle to the left of the one, which was at $6.21 down here. In April, we got down to that 723 and bounced. So as of right now, we're looking at a higher low on the year chart and just trying to finish at the top of this year candle. That way we can have the best chance of going 2 up as soon as possible next year, triggering this 2 down, 2 up, which also has a magnitude of 70.08, right? So not much change from the higher time frame, especially the week and beyond. There's nothing breaking down. We're still leaning bullish. All the actions that's happening is on the, I don't even want to say the 1 day chart. It's like the 4 hour, 1 hour chart is where all the action happening. So just continuing to monitor those January, February contracts and beyond, and just looking for that, maybe further pullback on the day to see if we can get another a good entry for some more longs, right? But again, even if we get that pullback, we want to wait for the trigger back to the upside to get into those. You don't want to be trying to catch a falling knife or calling bottoms, right? We wait for those things to trigger. You don't need to get all of the move, especially if there's a lot of magnitude in the move. Just getting a big chunk of the move is all that matters, and making sure you're not out there losing money, right? Trying to get in too early. But anyways, that's how everything looks from the week on up to the year. Let's go ahead and zoom back in. Let's go to the 5-minute chart and our scalp chart for tomorrow to talk about how we will play tomorrow's open, really in kind of all day, because the Fed announcement is not until, I think, 1 Central, 2 Eastern, and then Powell doesn't speak until 30 minutes after that. So the afternoon should be pretty lively, but the morning, it may be a time where we've just got to scalp to make some money if you're looking to do something before the rate announcement, right? So let me just get the right tool here. So on the chart, we do have the 4-hour markers. We've got previous high a day lining up with last week's high up here at 48.05. We've got the overnight high as of right now, 47.78, overnight low 47.07. I just put those there for illustration purposes. We don't know what those will be until tomorrow when the pre-market is finally over, what the overnight pre-market high and lows will be, and then the previous low a day down here at the bottom of the chart. So let's just say this is the range for the overnight, and let's say by the open, we just open basically at, there we go, my tool, there we go. So let's say we open basically at the week flip, right? We get right in the middle of overnight range. If we talk about just the proven and repeatable strategy, we're going to look at the open. If we push up after the open and maybe we get a rejection off an overnight high and we push back down, but we get a bounce at or above the opening print, then we want to look to get into calls. First target would be the overnight high. Second target would be previous high a day. So not a lot of magnitude. That's just the way things go with how price action went on Tuesday. So to the upside, not a lot of magnitude, but that is how you would play it. Look for higher lows at or above opening print, and look to get into calls, targeting overnight high and previous high a day. On the other side of the coin, if we open and we push down, say we get a bounce off overnight low, and then we get a lower high at or below the opening print, we want to look to get into puts. First target being overnight low, second target being previous low a day. Now, if we get some type of price action that just goes straight down, it's kind of like this morning's action. If we get price action that just goes straight down to one of these major 4-hour markers, right, or major price levels, if price goes down here to overnight low and you see a bounce and then maybe a lower high, but then you get a higher low, maybe you want to take your chance at getting a call at that point. Obviously, first target would be opening print, right? You got to get back to the opening print and to turn the day back green in order to expect any type of momentum to continue to push you up to overnight high and previous high a day. But that is, it puts more risk on the table buying a call below opening print. But as long as you keep that in mind, and as long as you act accordingly, right? Maybe you don't get as large of a position and you wait to add to the position once you get some type of confirmation of a higher low at or above opening print. Maybe you don't go with a weekly, maybe you get another week out, or just give you a little bit more time, a little less data to work with. You got to think about those things when you add the risk. But if you don't want that added risk, then obviously we're looking for higher lows at or above opening print to get into calls, lower highs at or below opening print to get into puts. All right. think we've done enough of that. Let's go ahead and go to the 4-hour chart and look at things from a more of a day trade, intraday, more than a scalp type of trade, right? Looking at the 4-hour chart, right? Again, we're dealing with this 46.79 level, last year's 50%. Again, resistance, support shortly, then resistance. So is this going to turn into support again, or are we going to fall back down? Got the gap below, got, possible 1-2 up, one combo 2 up, 2 down on the day chart, which we'll look here at a second. So we're not going to take the downside off of the board, right? We're up against this weekly broadening formation as well. So if we do get price action to the downside in the first 4-hour candle of tomorrow, that would give us a 3-1-2 down, right? That would trigger at the low of the low of the second 4-hour candle of Tuesday, and the magnitude would be the previous low a day. Obviously, you've got the gap below, so you could, sell half your position, 3/4 of your position here, let some run to see if we get that gap fill. If we do, that would be great. If we go to the upside, 3-1-2 up, no real magnitude there. So obviously, you're going to be looking for the break of previous high a day if you do get into that, and looking for momentum to the upside. But again, rate decision is in the afternoon, so Monday might give us a nothing burger. So even if we do break to above the second 4-hour candle from Tuesday, previous high day, maybe all you get, maybe a little poke above, and then it comes back through down below, and you move sideways. So, just keep that in mind when you're thinking about the magnitude of the move and whether you want to enter that. Right, and then the day, like we were talking about, if we do get into that gap, that does trigger the one combo 2 up, combo 2 down, magnitude being the low of the candle to the left of the 2. Obviously, we're going to have a couple bounce points here because we are in the face ripping uptrend in the short term. So, especially last week's 50% level, that's going to be a possible bounce level, but that does overall just line up with the magnitude of that move, 1 combo 2 up, 2 down. Obviously, we're not looking for a bounce to the cent off of last week's 50% level, but you can see how close that is. So we talk about the previous week's 50% level a lot. I don't know. I guess we didn't talk about it yesterday because we didn't really approach it. But go back to any of our videos throughout any week, and we talk about the reaction to the previous week's 50% level if we do head that in that direction, right? We want to see, are we going to get that bounce? Are we going to get muted action that's just going to move us sideways? Or are we going to fall through and get some type of lower high to give us more momentum to the downside to try and take out, market makers expected move low, or even the previous week's low, and give us a bearish engulfing candle on the 1 week chart, right? That's what we got from a shorter time frame perspective. Let's just go to the notes real quick so we can just look at the numbers and not just the charts. All right, so for Wednesday, December 10th, there will be 14 trading days left in 2025, and the close on Tuesday, December 9th was 47.79. We know that the week, month, quarter, and year are green, and these are the levels that we would have to hit or go below in order to turn them red. We know that there's a plus or minus $5.03 expected move by the market makers, giving us a range of 51.53 to 41.47 for the week. And we know where our gaps above and gaps below are, right? So these are always going to be consistent in our notes because we need to know those levels for points of reference. We talked about on the scalping perspective, we look for higher lows at or above opening print to get into calls, and lower highs at or below opening print to get into puts. And then on the 4-hour, we talked about how if we get price action to the downside in the morning, that will trigger a 3-1-2 down at 47.35 with the magnitude of 46.47. And we've got the extended targets here with the top of the gap and the gap close, right? If we go to the upside, again, not a lot of magnitude. We still get a reversal of a continuation of a 3-1-2 up, triggering at 47.94. Again, magnitude only being 48.05, so not a lot there. But if we do get moving, we've got the extended targets of 48.60 and 49.06 out there. On the day chart, we talked about, that would be not a 2 up, 2 down, but it would be a 2 down, 2 down if we go to the downside. And again, if we hit the 46.30 level, then that triggers the 1 2 up, 2 down, and that gives us a magnitude of 43.15. So a lot larger move there, about $3 move there. But again, we talked about the uptrend that we're in, so we do have possible bounce points at 45.54 and 44.44. To the upside, we would have a 2 down, 2 up reversal triggering at 48.05. Again, not a lot of magnitude there either, about 55 cents at 48.60, but we do have our extended targets of 49.50 and 50.76 out there. We won't go back to the charts. We'll just stick with the notes here. The week is green, right? We went above 48.05 on Monday, peaked above it again today. Well, actually hit right off of it again today. So we have triggered the 2 up, 2 up. Let's go ahead and underline that to show that we have triggered it. It's not going to be in bold because it's not in force, right? Right now we're at 47.97, and so that's below the trigger. So it's not in force. We got to get back above that 48.05 to get it back in force. But once we're back in force, we're looking for a magnitude of 50.19 for the 2 up. Combo 2 down, combo 2 up as the first magnitude, and the second of 50.76. If we reach there, I would think that we'll probably go past that because we're probably going off the catalyst of the rate decision or Powell's press conference. So we do have the extended targets out here as well. On the month, we're still looking to get that 2 up, right? We need to get that 50.19. If we can get that 2 down, 2 up, take care of that 50.76 magnitude, that locks in the higher low on the month, and then we can have the extended targets out here, which really just rolling and looking at the quarter chart, right? Because we have triggered the 1 combo 2 down, combo 2 up at 36.15, magnitude of 70.08. So these intermediate targets, they basically play in on the month charts as well. We did reach these 2 targets earlier in the quarter, but we're back below them. So we'll wait to cross those out once we're back above those again. On the year, triggered the 1 2 up 2 down, but we've made the higher low so far. Nice green hammer. Just looking to finish at the top of the candle for the year, giving us that good chance of going 2 up real early next year and triggering that 2 down 2 up on the year, which would give us that 70.08 magnitude as well. All right. So there you have it. That is the video for today. Those are your triggers and targets for everything from a scalping perspective all the way up to the 1 year chart. Tried to jam in as much as possible. Did go a little bit faster. Actually, I'm looking at it. It's not too much shorter of a video than normal, so guess I just talked the normal amount. But anyways, I hope everybody enjoyed it. I'm gonna end the video at this point here. Gotta get to doing some things, but we'll end the video like we normally do. If you're watching this tonight, Tuesday night, we hope you get some good rest tonight. Wake up refreshed tomorrow. If you're watching this on Wednesday morning, we hope you got some good rest last night and feeling refreshed today. And we look forward to getting out there and trading with you.